Welcome to our deep dive on the TJX companies. They're a leading off-price retailer, and we're going to be trying to figure out if their stock is a good fit for your portfolio. We got a bunch of sources here: company reports, financial analyses, news articles, all sorts of things like that.
Yeah, so to really get a handle on where TJX is today, I think it helps to go back to their beginnings. They actually started as a subsidiary of the Zaire Corporation back in 1987. And it's pretty interesting because TJX's success actually ended up with them kind of taking over the parent company.
Wow. So they were the subsidiary, but then they became the parent company.
Yes, exactly.
Okay, cool.
Yeah.
And then their growth is largely attributed to acquiring a bunch of other brands, like Winners Marshalls, Home Goods, Sierra Trading Post, all these big names now under the TJX umbrella. And this expansion wasn't limited to the U.S. either. They made a point of moving into international markets: Canada, the U.K., Australia.
Right. And that brings us to their current financial performance. As of December 18th, 2024, TJX stock is down 1.48%, Zacks Investment Research. They're a pretty well-known firm. They've given the stock a hold rating.
So hold, meaning that they don't expect it to do much better or worse than the market. But they also gave it a value score of D, which seems like they might think it's a little overvalued.
Yeah, potentially. But if we dig a little deeper into their financials, in 2024, they reported a revenue of $54.22 billion, operating income of $5.979 billion, and net income of $4.474 billion. And their cash flow per share is currently at $4.81. Also worth taking note of their debt-to-equity ratio, which sits at 0.35.
Okay, so that seems pretty good. Sounds like they're using debt responsibly.
Yeah.
So now how about their market share? TJX is obviously a big player in off-price retail. They've got a huge network of 4,954 stores across 9 countries.
Yeah.
And their brand portfolio is massive. TJ Maxx, Marshalls Home Goods, Sierra Winners Home Sense.
Yeah, they've definitely got a wide range of customer preferences covered there. It gives them a really strong market presence. And it's not just about size for them. They're also pursuing innovation. For example, they've partnered with Code Labs to implement their energy management information system. It's called EMIS in their stores.
Oh, interesting. So what does EMIs do?
Well, it optimizes energy consumption. It helps streamline all sorts of different store systems. You can even manage things remotely. And it automates maintenance tasks.
Huh. So they're really focused on efficiency and sustainability then.
It seems that way. We talked about the possibility of overvaluation earlier, so to get a better grasp on that, let's take a look at some key valuation metrics. TJX has a price-earnings ratio, or PE ratio, of 29.45, and a price-sales ratio, or PS ratio, of 2.45. Now, the PE ratio compares the stock price to the company's earnings per share. Basically, a high PE ratio often means investors are willing to pay a premium for each dollar of earnings.
Makes sense. And the PS ratio compares the stock price to the company's revenue per share. So that can help us see if the company is overvalued or undervalued based on its sales.
Exactly. Now, some other metrics to consider are the EV/EBITDA ratio, which for TJX is 19.72, and the PEG ratio, which is 3.03. The EBITDA compares the company's enterprise value to its earnings before interest, taxes, depreciation, and amortization. And the PEG ratio factors in the company's potential for growth. Generally, a PEG ratio above 1 might mean the stock is overvalued compared to how much it's expected to grow.
Okay, so those are some things to think about when we're looking at their valuation. Now, what about their recent acquisitions? In 2015, they bought the Australian retailer Trade Secret and then rebranded it as TK Maxx. Seemed like a smart move to expand their global footprint.
Definitely. And then in 2019, they acquired a 25% stake in Familia. That's a Russian off-price retailer. Shows their ambition to get into emerging markets. But we also have to acknowledge the impact of things like the COVID-19 pandemic. Back in the second quarter of 2020, they saw a 31% drop in revenue because of store closures. Really highlights how vulnerable companies can be to global disruptions.
Yeah, that makes sense. So given all of this, what are some of the pros and cons of owning TJX stock? Seems like they've got some pretty good brand recognition.
Yeah.
And a loyal customer base, which are both huge assets in retail. They've also got that history of consistent dividend payments and share buybacks, which can be pretty appealing to investors.
Yeah, for sure. And their potential for growth in international markets is another plus. Expanding into new markets can really boost revenue and drive growth. Plus, they're committed to sustainability and innovation, which are becoming more and more important for both consumers and investors these days.
Right. But there's some potential downsides too. Like we mentioned before, there's that concern about the stock being overvalued, meaning the current price might not match the company's actual worth.
Exactly. And we can't forget that TJX's performance is tied to the overall economy. If we hit a recession and consumer spending drops, their sales and profits could take a hit. Plus, there's always the risk of data breaches and cybersecurity incidents. Those can really hurt a company's reputation and finances.
Yeah, that's a good point. That data breach back in 2007, that was a pretty big deal. It affected millions of customers and cost them a ton of money. It really showed how vulnerable even big companies can be in the digital world.
It was definitely a wake-up call for a lot of businesses, really highlighted the importance of cybersecurity, and made companies rethink their security protocols, invest in better ways to protect customer data.
Yeah, for sure. Okay, so we've talked about the risks, but let's look at their dividend policy for a minute. They're currently offering an annual dividend of $1.50 per share, which gives them a dividend yield of 1.24%. That's actually pretty attractive for investors who are looking for income. And it's paid quarterly. So you've got that consistent stream of income coming in.
Right. And it's also worth noting that they recently increased their quarterly dividend amount by 13%. So now it's at 0.3755 falls per share. That shows they're confident in their future earnings and that they're committed to rewarding their shareholders.
Okay, so they're taking care of their investors. And what about share buybacks? Are they doing any of those?
They are. Their share buyback yield is 1.50%. And remember, share buybacks reduce the number of outstanding shares, which can increase earnings per share and potentially bump up the stock price. So when you combine the dividend payments and the share buybacks, you get a total shareholder yield of 2.74%.
Oh, wow. That's pretty good. Okay, so now let's talk about their commitment to ESG factors. Environmental, social, and governance. TJX has set some pretty ambitious environmental goals, like reaching net zero greenhouse gas emissions by 2040.
Yeah, and they want to switch to 100% renewable energy for their operations by 2030 and divert 85% of their operational waste from landfills by 2027. They're also focused on making their packaging more sustainable, aiming for 100% reusable, recyclable, or sustainable packaging for their own products by 2030.
Wow, so they're really trying to make a difference. It seems like they're taking this stuff seriously.
Definitely. And their social responsibility initiatives are worth mentioning too. Like they've got a mentorship program for their employees and a global strategic leadership program that shows they're trying to build a positive and inclusive work environment.
That's great to hear. So with all of this information, what's the final verdict? Is TJX stock a good fit for someone's portfolio?
Well, that's a tough question. It really comes down to individual investment goals and risk tolerance. For some people, that potential for overvaluation might be a deal breaker. They might want to wait and see if the stock price drops before they buy in.
Yeah, that's fair.
Yeah.
But others might be comfortable with the current valuation, especially when you consider their track record of growth and how strong their position is in the off-price retail market.
Yeah, I can see that. Their off-price model is a big part of their success. They've tapped into this consumer desire for value, especially with all the inflation and uncertainty we're seeing in the economy right now.
It's really interesting how they manage to attract such a wide range of shoppers, from bargain hunters to people just looking for a good deal on quality brands. It seems like their whole merchandising strategy, like creating that treasure hunt experience,
Yeah,
really keeps customers coming back.
definitely. That high inventory turnover is a big part of their strategy. By constantly getting new stuff in, they create this sense of urgency and excitement, like you never know what you're going to find, so you have to keep checking back.
Yeah, I get that. It's like retail FOMO.
Exactly.
Okay, so this strategy seems to be working for them. They've not only survived economic downturns, but they've actually done really well during those times. When people have to tighten their belts, they're even more open to the value that TJX offers.
Right. But it's not just about offering discounts. They've also been really good at adapting to the changing retail landscape.
Mhm.
They've invested in their e-commerce platform and omni-channel capabilities. They recognize that customers today want a seamless experience, whether they're shopping online or in store.
Yeah, that makes sense. They have to keep up with online retail, just getting bigger and bigger. But it's great that they're also focusing on sustainability. Their environmental goals are really impressive.
Absolutely. Setting those targets for net zero emissions, renewable energy usage, waste reduction. It sends a clear message to investors and consumers who care about ESG principles. It shows they're not just thinking about short-term profits, they're taking a long-term view, trying to create value for everyone involved.
Right. Okay, so we mentioned that data breach earlier. Back in 2007, that was a pretty big setback for them. Millions of customers were affected. And they lost a lot of money. It really shows how vulnerable companies are in the digital world.
Yeah, it was a big deal. I think it was a wake-up call for a lot of companies. It made them realize how important cybersecurity is. And
Right.
they had to start taking it more seriously, investing in better security measures to protect their data and their customers' data.
For sure. So for investors, that incident is a reminder that they need to think about cybersecurity risks, when they're looking at a company. Even companies that seem really stable and successful can be vulnerable to these kinds of attacks.
Absolutely. You always have to consider the risks.
Okay, so let's dive into their financials a bit more. What does their recent annual report tell us?
Well, their 2024 report shows some pretty impressive revenue growth. They hit $54.22 billion in total revenue for 2024, which is a big jump from previous years. This growth was driven by a combination of strong comparable store sales, which means their existing stores are doing well, and by opening new
Now,
stores.
both their existing stores and their new stores are contributing to their success.
Exactly.
That's great.
And their operating income is looking good too. It reached $5.979 billion in 2024. This shows that they're managing their costs effectively and staying profitable, even in a tough economic environment.
That's impressive. But we should probably acknowledge the impact of inflation. Rising costs for goods and labor must be putting pressure on their profit margins.
Oh, definitely. That's a challenge for pretty much every retailer right now, not just TJX. The key is how well they can manage those costs and maybe pass some of them on to consumers without hurting their sales.
Yeah, that's a tough balancing act. Okay, so let's step back for a minute and look at the bigger picture. What are some of the main risks that come with investing in TJX stock? We've already talked about cybersecurity risks, which are always a concern for companies operating online.
Right. But there are other things to consider too, like the possibility of an economic downturn. A recession could really impact consumer spending, which would hurt TJX's sales and profits.
Yeah, that makes sense. The off-price retail sector is usually pretty resilient, but it's not immune to economic cycles.
Hmm.
When the economy is uncertain, people tend to cut back on things they don't absolutely need, and that could definitely affect TJX.
Absolutely. And we also can't ignore the competitive landscape. The off-price retail sector is really competitive. You've got companies like Ross Stores and Burlington Stores all fighting for market share.
Right, they're all trying to innovate and adapt,
Right.
which means TJX has to stay ahead of the game. They need to find ways to stand out, whether it's through their merchandising strategies, their store experience, or their online presence.
Exactly. They can't afford to fall behind. And then there's the potential for supply chain disruptions, which have been a bigger issue lately. Because of all the global events happening, these disruptions can make it hard for TJX to get the merchandise they need and to meet customer demand.
Right, so there are definitely some risks to consider, but let's not forget about their strengths. We've talked about their strong brand recognition and loyal customer base. Those are really valuable.
Yeah, definitely. And their business model is unique. You know that off-price model. It lets them offer brand name stuff at really big discounts, which is a huge draw for consumers, especially when times are tough.
Right, people are always looking for a bargain.
Exactly. So they've positioned themselves as the place to go if you want quality brands at good prices.
Yeah, it's a smart strategy. And they've also got that proven track record of international expansion. They've been really successful at adapting to different markets and navigating different regulations, which is crucial for growth on a global scale.
It is. They've managed to take their successful model and make it work in all sorts of different cultural and economic contexts.
Yeah, that's really impressive. Okay, so going back to the question you asked before, do TJX's innovative initiatives and commitment to ESG outweigh the risks? It seems like it depends on the individual investor and their own risk tolerance.
Yeah, I think that's right. Some people might be really turned off by that potential for overvaluation. They might prefer to invest in companies that seem less risky.
Yeah, that's understandable.
But other people might be okay with that risk, especially when you consider TJX's potential for growth, their strong track record, and their commitment to ESG principles. They might see TJX as a company with a lot of long-term potential and be willing to take on more risk for the chance of bigger returns.
Yeah, I can see that. It's a tough call. There's no right or wrong answer. It's all about what's right for each individual investor.
Exactly. It's a personal decision.
Okay, so we've covered a lot of ground here. We've talked about TJX's history, their financial performance, their acquisitions, their innovation pipeline, their valuation, the pros and cons of owning their stock, their dividend policy and share buybacks, and their commitment to ESG factors. It's a lot to take in.
It is, but hopefully it's giving our listeners a better understanding of TJX and help them decide if it's the right investment for them.
Yeah, for sure. So what are your final thoughts on TJX? Is this a company you'd consider investing in?
You know, it's tough to say for sure. I think they have a lot going for them, but there are also some risks to be aware of. I'd need to do more research and really dig into their financials before I made a decision.
Yeah, that's fair. It's always a good idea to do your own research before you invest in anything.
Absolutely. You want to make sure you understand the company. and the risks involved.
Right. So if any of our listeners are interested in learning more about TJX, what would you recommend they do?
Well, I'd start by checking out their website. They've got a lot of information there
Yeah.
about their company, their financials, their sustainability initiatives.
Okay, great. And are there any other resources you'd recommend?
Yeah, definitely. You can find analyst reports from firms like Zacks Investment Research and Morningstar. Those can give you a different perspective on the company.
Okay, cool. So listeners, be sure to check out those resources and do your own research before you make any investment decisions.
Exactly. Don't just take our word for it.
Right. All right, so that wraps up our deep dive on the TJX companies. Thanks for joining us.
Yeah, thanks for having me.
We hope you found this helpful, and we'll see you next time for another deep dive.
Sounds good. And for others, that valuation might not be such a big deal, especially when you consider TJX's track record. You know, they've had consistent growth, and their position in the off-price market is really strong.
Yeah, it seems like that off-price model is really working for them.
Yeah, it is. They've really tapped into that consumer desire for value. You know, with all the inflation and uncertainty we're dealing with, people are really looking for a good deal.
It is interesting how they managed to attract such a diverse group of customers, though. It's not just bargain hunters. You get people who are just looking for quality brands at a good price.
Right. It's like they've created this treasure hunt experience,
Yeah.
and that keeps people coming back.
Yeah, I could see that.
It's all about that high inventory turnover. They're constantly bringing in new stuff, so you never know what you're going to find. You got to keep checking back.
Right. It's like you said before, retail FOMO.
Exactly.
And this strategy seems to have helped them during economic downturns. They haven't just survived, they've actually thrived.
Yeah, when people have to tighten their belts, TJX really becomes an attractive option.
Makes sense. But they're not just relying on discounts. They're also adapting to the changing retail landscape.
Right. They've been investing in their e-commerce platform and their omni-channel capabilities because they know that today's customer wants a seamless experience, no matter how they're shopping.
Yeah, it's got to be easy and convenient.
Exactly.
And it's great that they're focusing on sustainability, too.
Definitely. Those environmental goals they've set are pretty ambitious.
Yeah, they are.
You know, with their net zero emissions targets and their plans to use renewable energy and reduce waste. It shows that they're taking ESG seriously.
Yeah, it seems like they're trying to do the right thing.
They are, and that's something that investors and consumers are paying more and more attention to.
For sure. Okay, so let's talk about that data breach again. Back in 2007, it seems like that was a pretty major event for TJX.
It was. It affected millions of customers and cost them a lot of money.
Yeah, it really highlighted the importance of cybersecurity.
It did. I think it was a wake-up call for a lot of companies. You know, they realized that they had to start taking cybersecurity more seriously.
Yeah, and that they needed to invest in better security measures.
Exactly. Protect their data and their customers' data.
Right. Because even big companies can be vulnerable.
You can. No one is immune to these kinds of attacks.
Okay, so let's look at TJX's financials a little more closely. Their recent annual report should give us some good insights.
It does. Their 2024 report shows some really strong revenue growth.
Oh, yeah.
Yeah, they hit $54.22 billion in total revenue. That's a big jump from previous years.
Wow. So what's driving that growth?
Well, it's a combination of things. Their comparable store sales are strong, which means their existing stores are doing well. And they're also opening new stores.
So it's a two-pronged approach.
Exactly.
That's great.
And their operating income is healthy, too. It reached $5.979 billion in 2024.
Okay, so they're managing their costs effectively.
They are. And they're staying profitable, even with all the economic challenges out there.
Right. But we should acknowledge the impact of inflation. You know, rising costs for goods and labor. That's got to be putting some pressure on their profit margins.
It is. It's a challenge for everyone in retail right now.
Yeah.
But the key is how well they can manage those costs and maybe pass some of them along to consumers without hurting sales.
It's a delicate balance.
It is.
Okay, so let's shift gears a bit and talk about the risks of investing in TJX stock. We've already talked about cybersecurity risks.
Right.
But what are some of the other things that investors should be aware of?
Well, one big one is the possibility of an economic downturn. If we hit a recession, consumer spending could drop significantly, and that would definitely hurt TJX's sales and profits.
Yeah. That makes sense.
And even though the off-price retail sector is usually pretty resilient, it's not immune to economic cycles. When
Yeah.
people are feeling uncertain about the economy, they tend to cut back on discretionary spending, and that could impact TJX.
So economic conditions are definitely something to watch.
They are.
And what about competition?
Oh, yeah. Competition is fierce in the off-price retail sector. You've got companies like Ross Stores and Burlington Stores.
Yeah.
They're all fighting for the same customers.
Right. So TJX has to find ways to stay ahead of the curve.
They do. They need to keep innovating and finding ways to differentiate themselves.
Whether it's through their merchandising,
Yeah.
their store experience,
Mm-hmm.
or their online presence.
Exactly.
Okay, so competition is a big factor.
It is.
And then there's the issue of supply chain disruptions.
Right. Those have been a bigger problem in recent years, with all the global events that have been happening.
Yeah.
And those disruptions can make it hard for TJX to get the merchandise they need and to meet customer demand.
Right. So those are some of the risks.
They are.
But let's talk about TJX's strengths for a minute.
Okay.
We've already mentioned their strong brand recognition and loyal customer base.
Yeah.
Those are huge assets.
They are.
Yeah.
And their off-price business model is a big advantage.
How so?
Well, it allows them to offer brand name merchandise at deep discounts, which is really appealing to a lot of consumers, especially in this economic climate.
Yeah, it seems like they've really positioned themselves as the place to go for value.
They have.
And they've got a proven track record of international expansion, which is really impressive.
It is. They've been able to adapt their model to different markets, and they've been successful.
It shows that they're adaptable
Mm.
and that they have a solid strategy.
Exactly.
Okay, so we've talked about the risks and the strengths, but the big question is TJX stock a good investment?
That's a tough one to answer. It really depends on the individual investor.
Yeah.
Their risk tolerance, their investment goals.
Right.
Some people might be okay with the potential for overvaluation. They might see TJX as a company with a lot of growth potential, and they might be willing to take on more risk for the chance of bigger return.
And other people might be more cautious.
Right. They might want to wait and see if the stock price drops before they invest.
So there's no right or wrong answer.
Exactly. It's a personal decision.
Okay, so I think we've covered a lot of ground here. We've talked about TJX's history, their financials, their acquisitions, their innovation pipeline, their valuation, the risks and the strengths, their dividend policy and share buybacks, and their commitment to ESG.
Yeah.
It's a lot to digest.
It is.
But hopefully it's given our listeners a better understanding of TJX.
I hope so.
So what are your final thoughts?
Well, I think TJX is a really interesting company. They've got a lot going for them. But there are also some risks to consider.
Right.
I think any potential investor should do their own research, really dig into the company's financials before they make a decision.
I agree. It's always a good idea to do your homework.
It is.
Yeah. So it seems like TJX has really managed to navigate this crazy retail world.
Yeah.
And they've come out on top in the off-price sector.
They have. It's a combination of factors, their business model, their acquisitions, their focus on innovation.
And their ability to adapt.
Yeah.
Keeping up with changing consumer preferences,
Right.
embracing new technologies.
Exactly. And their commitment to ESG is a big plus. It puts them in a good position for the future, especially with investors who really care about sustainability and social responsibility.
Right. But we have to remember that every investment comes with some risk.
Oh, yeah, for sure.
We talked about that potential overvaluation. And economic downturns can always impact consumer spending.
They can.
And the competition is intense. Plus, there's always that threat of cybersecurity incidents.
Yeah, those are all things to keep in mind.
So for any potential investors out there, it really comes down to doing your research, weighing the potential rewards against the risks.
Absolutely.
We've tried to give you a good framework for analyzing TJX, but ultimately, the decision is yours.
It is.
So if you enjoyed this deep dive, we encourage you to subscribe to our YouTube channel. We've got more deep dives coming up on all sorts of companies and industries.
Yeah, and be sure to leave a comment. Let us know what stocks you'd like us to cover in future episodes.
We love hearing your suggestions.
We do.
All right, so that wraps up our deep dive on the TJX companies. Thanks for joining us.
It was great being here.
We hope you found this insightful, and we'll see you next time.